Welcome everyone. Okay, speed recap. We are building an addition off the back of our house, and if you want to follow along that journey from design to being finished, check out some of these other videos. I'll link in the description. But today we're not talking about any of that. We're talking about financing your addition and what we are personally doing. So, financing an addition is different from a regular home mortgage. With a regular home, maybe your bank will say, sure, we'll give you $1 million, but when it comes to already having a mortgage, it is the equity that's going to limit how much you can borrow. Now, I can't tell you which one of these you should do. All I can do is lay out a few common options so that you can decide with your bank which works for you in your situation. So first one is a home equity loan. So this is where you can withdraw up to 80% of the equity in your home and essentially get a check for that amount. So round numbers, say you bought a house for $300,000 and it went up in value to $400,000. Now you have $100,000 in equity, even if you didn't pay anything off. But let's say you did. Let's say during that time you paid off another $100,000, which means in total you have $200,000 in equity to draw on. Now the bank won't let you get a loan for that full $200,000, but they may let you withdraw up to 80% of it, or $160,000. The rate tends to be fixed with a longer payback period, which could be an advantage depending on your situation. The downside is, unless you know how much you need to borrow, you may end up withdrawing the whole $160K and therefore paying interest on the $160K. But if the addition only came out to say $130,000, you're paying interest on $30,000 that you didn't need to. And this is where a home equity line of credit comes in. A home equity line of credit could be interesting. Similar to a home equity loan where you're still withdrawing up to 80% of your equity, but you're not paying down the loan right away. You effectively are given a very high credit limit, similar to say a credit card, except you usually do bank transfers and checks to pay for things. You don't actually get a credit card, at least not with the banks I've dealt with. So you only pay interest on how much the builder needs at that time. So meaning if your builder only needs a small deposit to start, a little more when they're halfway through, and the remainder once they're finished, you're only paying interest on a very small amount in the beginning and not paying any interest on the portion you didn't use. So you don't have to start using it right away. You can have a $0 balance for many months and pay no interest until the builder starts digging. And most banks won't charge fees unless you cancel the home equity line of credit within a year or two. The third common option is a cash out refinance. So very similar to a home equity loan, but instead of having two loans, your primary mortgage and the home equity loan, you are essentially taking out all of that equity in cash, again up to the 80% mark, and recreating your original mortgage, which means you're essentially paying interest on what you withdrew straight away because your mortgage loan is now higher. But if you got lucky and you've been able to lock in a lower rate than you had before, this could be a good option. Say you had 7% on your mortgage and now with your cash out refi, you're now dropped to 4%, you could take some cash out without increasing your monthly payments. However, most banks will charge extra fees, and at least in 2023, mortgage rates are pretty high. So while I don't know you in your situation, at least in 2023, I'd be a little careful with this option. Now the last option is cash. Of course, this isn't for everyone. Depending on where you live and the size of your addition, this could be wildly outside the realm of possibility. But depending on how much you can borrow from some of the other options, it may have to be part of your strategy. Now, there are other home loan options too, like personal loans or home improvement loans, but depending on the limits, your addition may be higher than these or the payback periods may be too short. So what are we doing? Well, we're using a home equity line of credit, and while our house did appreciate a little, it's not enough to cover the whole thing. So we are going to have to use cash to cover the rest. Now, I hope this was helpful. I know it certainly makes options harder because with a small amount of equity, unless you have a lot of cash lying around, it will have to make putting an addition a little trickier. Now, I don't usually talk about finance on this channel. This was mostly just documenting our journey and building an in-law. So if you want to follow along, hit subscribe and we will see you next time. Take care, guys. One take, yes!